Here we are, spring market 2022 update. Here we are mid-April, and it's the most intense spring market I think we've all ever been a part of. So first and foremost, just wanted to say real quick, good luck to all the Boston Marathon runners. Patriots Day in Boston and Massachusetts overall is a really special day. Great job by everybody who's raised a ton of money. It's probably one of the biggest fundraising days of the year and fundraising events of the year. So a lot of really great charities that are hopefully raising some awareness and obviously collecting some money to help those in need. So if you haven't donated yet to somebody that's running, that's been asking you for a donation, hopefully this serves as a reminder to do it. We got NBA playoffs, we got opening day, and we got this crazy hot, intense spring market. So just want to share with you what's going on. Obviously, the market's moving super, super fast right now. Year over year, home prices are up 14%, right? We've seen massive home price appreciation. We're also seeing 1 out of every 4 deals across the U.S. Is a cash deal. So lots of cash buyers out there trying to do everything they can. One, obviously, to buy housing. It's a hot sector, but also to win. So it went from waiving inspections to waiving appraisals to waiving mortgage contingencies, and somehow it's turned into I'll just pay cash if that's the only one I'm going to win. So that's what's going on. We're also seeing, as a result of that, the home price appreciation, the intensity, the demand. We're seeing bidding wars at the highest level on record. So 71% of all homes across our country last month was 71% were in bidding wars. That's up from 60% last year at this time. So huge increase, biggest number on record. The most competitive properties are single family homes and townhouses. The most competitive price points, 1 to 1.5 million, are seeing bidding wars 77% of the time. $600,000 to $800,000 homes are seeing bidding wars 74% of the time, and 1.5 million plus are seeing bidding wars 73% of the time. As a reminder, I'm seeing it. We're licensed in all 50 states. We're doing business everywhere. I can tell you that truly every market's hot right now, and everyone thinks their market is the hottest, and everyone thinks that nobody else from outside of the market understands that market. So it's always a hoot to do business in all these markets, but we're doing a great job. We're closing super fast, just as fast in any state, and it's wild to learn kind of what's going on in those markets and seeing the bidding wars there and the home price appreciation there and the demand there. If you're curious what the hottest markets are in the country, I'll give you the top 8. So Texas is the most intense market in the country, led by Colorado, Minnesota. That one surprised me a little bit. North Carolina, California, Washington State, Boston, followed by Florida. So those are some of the hottest markets in the country right now, where the bidding war levels are at their highest. So a lot of people have asked me, hey, how come rates going up hasn't impacted the demand? Okay, why is that going to slow down the market? That's eventually going to catch up with us, right? Like, those are the kind of things I'm getting. I'm just going to wait until home prices start to come down because of rates. I wouldn't wait for that. Okay, mortgage applications are only down 3% year over year. Okay, and last year was super busy. Last year was the busiest time on record. The reason mortgage applications are down is not a lack of demand; it's a lack of inventory. Typically, what promotes people to to apply for a mortgage and motivates them to apply for mortgage is seeing a house they like. So when there's 30% less homes on the market, less and less people are apt to apply for a mortgage. So mortgage applications are only down 3%. So demand's out the door. Okay, our applications are actually way up. Purchase applications are the highest we've ever seen, specifically on our team. So again, one of the big reasons that things aren't slowing down, and even with home prices appreciating and even with rates appreciating like crazy, which we'll talk about in a second, there's a ton of demand, and the higher rates are not impacting prices. One, inventory is at record lows. It's down 30% across the U.S. year over year. There's only 870,000 homes for sale in the U.S. Okay, we need about 2 million homes or 1.9 million homes to start kind of leveling things off here and make it a more balanced market. But reminder, like I said, there's 870,000 homes, which is way too low. Of that 870,000 homes, only about 400,000, or not only, but about 400,000 of them are new construction, but only about 50,000 of those homes or 40,000 of those homes, somewhere in between, are actually ready and built and can actually be acquired by someone. The rest aren't even built yet. So the real inventory that's available is actually much lower than 870,000. So massive inventory shortage in our country. There's a ton of pent-up demand out there due to demographics, but also due to all the people that didn't win in 2020 and 2021. They haven't come back. Okay, so Another part of it is actually the interest rate issue itself. A lot of people fear that interest rates are going to go sky high into the sixes, sevens, and eights. And so a lot of people are trying to get in to take advantage of the low rates that we're still seeing and improve their affordability. The alternative to owning a home is renting. Well, rent prices are also up 18%. Nothing motivates somebody to buy. I can't tell you how many phone calls I get when somebody says, I just got my rent increase notice from my landlord and I'm all set with the rent increases. They're up 18% year over year. So when you buy a house, as a reminder, you pay principal, which is forced savings. You pay interest, which is tax deduction, and you hopefully over the course of time gain equity, and that creates wealth. So homeownership, in my opinion, a better alternative to renting. And then, we're dealing with the major inflation issue, which I'm going to talk about in a second. But housing is a hard asset. Owning a home is a little bit of protection against the inflation, what's going on in our country, which has been a big, big issue. But here's the real thing. This is the reason, truthfully, in my opinion, why higher rates has not slowed down housing demand and is not going to slow our market down. Okay. Lots and lots of wealth was created in our country over the course of the last few years. Stock market was up almost 20% in 2020, almost 20 something percent, a little bit higher actually in 2021. So there's been a lot of wealth created. Okay. So there's a lot more confidence there. Everybody's looking at their investment accounts, their 401ks, all that kind of stuff. They've got a lot more cash so they can sustain a higher payment because their net worth is increased. But more importantly, the Bureau of Labor Statistics said that year over year, income is up 10%. Okay. There's a labor shortage. Economy's been doing great, so people are making more money. Employers are paying more money in order to attract workers. Okay, so think about that. Let's just say the average house that's buying a $1 million house, right, a home valued at $1 million. Let's just say their household income is, 200 or was 200,000 last year or 250. Okay, if it's gone up 10%, that means they're making an extra $25,000 per year. Okay, that's $2,000 a month more coming into their household, roughly. You pay taxes and all that kind of stuff, right? Inflation's up, so maybe some other things have gone up as well. Well, that same house that they didn't buy last year, maybe they're buying now, even though it's more expensive and rates have gone up. Maybe their mortgage payment has gone up $1,200 a month with higher rates and higher home prices, but their income's gone up. So that can easily cover the cost of homeownership. And in some cases, maybe let's say that household is making $300,000 a year, right? Their income's gone up $30,000 because it's increased 10% year over year. The income increases that we're seeing can withstand the increased monthly budgets for housing. So that's why you're not seeing a slowdown in people buying homes, even with higher rates and even with higher home prices. Wealth has increased and income has increased as fast as the mortgage payments has increased for our borrowers. And ultimately, for most of these people buying primary residence, housing's a need. It's a necessity. You need somewhere to live. And for all those other reasons I just mentioned, it's not going to change. So that's why increased rates has not slowed down demand. Okay. So what we're seeing with rates, while we're on that topic, in November of 2021, kind of was the tail end of the low rates that were brought on by the pandemic and the government stimulus. So 2020 and 2021, still the lowest rates of all time. Maybe November of 2021, rate was 30-year fixed, was at 2.875. Today, it's almost at 5%, maybe 4.5% on a jumbo deal. And like I said, about 5% on a conventional deal. It's the highest rates going back to November of 2018. Home buyers out there have lost about $150,000 in buying power. Now, why do you ask rates are going up? Well, inflation data that's been coming out, it's been terrible. And inflation is the enemy of interest rates, okay? Fed policy is completely changing to try to tame inflation and slow down inflation. And what they're doing is they're raising rates, they're slowing down or tapering their bond purchases and treasuries, and they're even reducing their balance sheets. And that's causing interest rates to go way up, okay? If the government raises rates, they think it will slow down inflation because ultimately it will reduce demand. Think about mortgage rates get higher, auto loan rates get higher, student loan rates get higher, credit card rates get higher, commercial rates get higher. It slows down spending, right? And it pulls back demand. And ultimately they think that will help fix the supply chain and pull down inflation. It's worked in the past. The last couple times the Fed has had to raise rates to combat inflation, you've seen rates kind of go up, eventually stop, and then come down sometimes just as fast as they went up. So hopefully that's what happens. Food's 9% more expensive than it was. Gas is 48% more expensive than it was. Used cars are up 35%. Think about everything's more expensive than it was. right? So the Fed is doing what they have to do. Inflation clearly was not transitory. It's definitely an issue they have to handle, and they haven't done a great job of handling the inflation front. So I think they're going to throw everything they have, and I think you'll see rates continue to climb this year. Okay. And lastly, the other question, one of the big topics I get every single day is about what's going on with appraisals. We're seeing deals that come in. There's appraisal language in them. There's all sorts of talk around appraisals. What happens if they're underappraised? So I just want to give you some quick tips on appraisals and what you should be doing to protect yourself against an underappraisal, or how you can try to combat an underappraisal. So first thing is, before you make an offer, have your real estate agent or as a realtor just check comps. An appraiser is going to use the 3 most recent sales in that town that are similar in location and size. Now, there's a shortage of inventory, so there's not a ton of comps out there. So in a lot of cases, it's pretty easy to figure out what comps the appraiser is going to use, right? But again, that's what the appraiser is going to use. They're going to three most recent sales in the neighborhood, in the town, that are similar in terms of size, style, square footage. Okay, so make sure you understand what the likelihood of the appraised value coming in based on the average of those 3 sales. Okay, now if it underappraises, what are your options? You can renegotiate the offer price. It actually happens a lot more often than you think. I think there's this common theme out there that you can't renegotiate the price. It happens a lot. Okay, you can pay the difference with cash, right? That's one of the easiest things you can do. You just got to know what your loan guidelines allow for a max loan to value, and making sure that you have the available cash. You can switch loan products. Okay, there's lots of different loan products that have higher loan to values. There's 80 loan to values, 90, 95, 100 in some cases. Know what your max loan to value on the product you're applying for is, and what alternative loan options are if the house underappraises. Okay, you can pay private mortgage insurance. It's cheaper than ever, right? So it's usually one of the best solutions we come up with that clients are super happy to hear about. And you can walk away from the deal. Obviously, there's some risks associated with that. 1, you don't get the house. 2, you could lose your deposit money. You should consult with your attorney and your realtor in terms of what your options are there, but you can always walk away, right? And then the source of funds, that's another question, is how, if a house underappraises, where can I get this money from? Well, you can leverage your own cash, that you have saved up. You can leverage your investments. You can get gift funds. Obviously, check with your lender to make sure gift funds are allowed and who they can come from. You can utilize a 401k loan. We see that happen all the time. It's almost like a self-bridge loan. You can use a home equity line if you have it on another property, or you can, you can potentially refinance even after the fact. Like once you close, if you want to do a cash out refinance, you want to pull some equity out, there's alternative solutions as the market keeps rising. So those are all things that I think it's important for buyers to know. So we covered a ton of information. I tried to keep it under 15 minutes. I think we're at right about 13 or 14. So I hope this is of value for you. The market's hot. We're trying to do everything we can to help our clients win. We've had one of the biggest weeks we've had, actually 2 weeks in a row, our most accepted offers. So our buyers are totally winning. It's not an impossible proposition to buy a house. We're having a great start to the year, one of the best starts of the year we've ever had on the purchase side. What we're doing is it's all about speed in terms of closing faster than anyone else in the industry. We are doing our pre-commitment process. We are available 24/7, nights, weekends, whenever somebody's out there looking for a house for a consult. We're talking to the realtors, both on the listing side and buyer side, to make sure that everybody knows how great our clients are and how prepared and empowered they are. And more importantly, for our clients, we're making sure they're totally prepared, empowered, understanding, and they have us as a resource whenever they need us. But as a reminder, we're licensed in all 50 states, so no matter where you are, we can help you, whether it's a refinance, a purchase, second home, primary residence, investment property, and we'd love the opportunity to do it. So thank you, everybody, for listening today. I hope you have a great rest of your spring market.